Hey everybody, this is Jim at SB500chart.com. It's about 4:20 on November 20th, 2013. Let me read this to you, then we'll take a look and try to figure out what went wrong or what went right or what happened here in the afternoon after we got the release of the Fed minutes. So let me just read this. The website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. Let's see what got violated today. Well, first off, boy, what promise the day had. Starting out, we mentioned yesterday that it looked like we were in something of a descending wedge pattern here. We broke out over that early, came back pretty much to back test, closed that little gap at the open. Not really, doesn't have to close, but it seemed to want to. Get up to 1795, go sideways, and then the release of the Fed minutes, just the wheels on the bus came off and off. Not to a horrible degree, but a pretty quick loss of 12 to 13 points on the S&P, which is at this point roughly 0.75%. So we have a swing today from the high to the low, 1796, let's call it. Let's call it about 18 to 19 points. We also broke this green rising support line, and if you look closely, you can see that after it broke, we came down to this bottom wedge line, then bounced up for a back test, then came back down. It is still not a technically significant margin. As a matter of fact, it's only about we closed only about 0.5% underneath this line, this green line. Interesting that we closed right at the apex of this little wedge. Here's the deal. Some people swear that they just don't trade on any day where there's either a Fed meeting or a release of the minutes or anything like that going on. If Bernanke's going to speak, not Bernanke now, I'm so used to Bernanke. But when the chairman speaks, chairwoman, chairperson speaks, then there's just a lot of volatility, and some people say, I just don't want a part of that. I'll let it settle out, let the markets digest it, and I'm kind of thinking that right now. I don't think I'm willing to say, oops, we're in a busted trend. I'm just not quite there. We may be, but since we are not technically significant here, since we broke out early and then fell back through late, the degree of the breakout was about the degree of the swing to the opposite side. I'm just not quite ready to throw the towel in on this. So I personally am going to stand pat. And I was actually personally up for the day, but that's because of some of the peculiar mix of things that I've got. I think we should get some support here down at this neckline from our inverted head and shoulders pattern. If you see, that pattern actually had a support line that was tested a resistance line that held up a number of times as resistance 1, 2, 3, pretty much 4. So and we really never have gotten anything to speak of in the way of a back test. So I would watch that line for a potential bounce. And I would also, if we do get that bounce, this line, if we get down to this level and we bounce, I think this line likely will have been turned into resistance, because by the time we get down here, we'll be pretty much at that technically significant margin. Now I'm going to do one little change on this chart, and I'm not going to change this bottom line yet, because we don't know if this is a legitimate bounce here or if this was maybe just some late day short covering. But since we know that this represents now something of a short-term top, I'm going to adjust this to here. And what that'll do is that will tell us, hopefully, that if we get over this line at some point in the days ahead, then we will likely come back to at least back test this broken green line right here. So guys, it was looking really good, like we might stay inside of this little green channel, and there's the outside chance that we could recover and get back in it tomorrow once the market has had a little time to sleep on the fact that quantitative easing is not going to last forever. And I'll be the first to admit that the QEs have certainly aided the markets. But where else are you going to go? When QE slows down, what are the banks going to do? All of a sudden start paying 6% on CDs? Well, that's a good question. What would that do? What would that do to the interest rates? So, anyway, guys, I don't think if anything happens, it's not going to happen overnight. And it's like if you want to put money to work, it appears that the stock market is about the only game in town. So let's keep an eye on it, see if this is indeed a legitimate break of this trend, or, as we saw back on the 8th of this month, when we broke just by a little bit again, will we have the strength to get back over this green line? We got over this blue line back here on the 8th after breaking through it on the 7th. We're about the same degree underneath this green line as we were underneath this blue line here. So, you know, it's possible because we have not reached that technically significant margin yet. So guys, that's it. That's it for today, November 20th, 2013. Thanks for watching. Thanks for your support. Let's see what the rest of this week brings us.